Hello and welcome to a discussion of the investing and financing sections of the cash flow statement. It is important that you view this before class so we can learn more together in class. After viewing this video, you will be able to prepare the investing and financing sections of the cash flow statement. You'll be able to compute the amount of cash related to purchases or sales of long-term assets, compute the amount of cash borrowings or repayment of long-term debt, and compute the amount of dividends paid. You will also be able to read the cash flow statement. Let's talk a little more about the investing activities section. This section reports cash associated with the purchase or sale of long-term assets. The amount of the change in the account can be determined with a plug if you know 3 of the 4 items associated with the account. Determine the cash related to each change. The cash amount is reported on the cash flow statement. A change in a long-term asset account is assumed also to be cash if there is no other information provided. Let's take a closer look at the financing activities section. This section reports cash changes associated with long-term liabilities. This generally consists of borrowings and repayments of long-term debt and notes payable. The amount of the change in the account can be determined with a plug if you know 3 of the 4 items associated with the account. Determine the cash related to each change. The cash amount is reported on the cash flow statement. A change in a long-term liability account is assumed to also be cash if there is no other information provided. The financing section also reports cash changes associated with owner's equity transactions. This generally consists of issuing and repurchasing common stock and paying dividends. The amount of the change in the account is assumed to be cash if there is no other information provided. The amount of cash dividend can be determined by using the retained earnings account. Put in the beginning and ending amounts and the profit or loss and plug for the amount of the dividend. The cash amount is reported on the cash flow statement. Let's look at the entire indirect cash flow statement. Notice the 3 sections and the subtotals in bold. The operating activities section begins with net income. Net income is adjusted for items that are included in net income that did not also change cash. The investing activities section includes cash received from selling and cash paid to purchase long-term assets. The financing activities section includes cash received from borrowing and cash paid to repay long-term debt. It also includes cash received from owners for new shares of stock and cash paid to owners for repurchases or dividends. A very positive cash flow from operations gives the company financial flexibility to invest to grow, repay liabilities, or repay investors. In this example, changes in current assets and current liabilities are fairly insignificant compared to net income. This indicates that customers are generally paying on time and expenses are generally being paid timely. Large amounts in this area would indicate otherwise. The use of assets, which is the depreciation expense, is $18,000, and the company purchased $36,000 of new equipment. The company is purchasing more long-term assets than is being used up and replaced. This indicates the company is attempting to grow internally. The proceeds from selling equipment were used along with cash generated from operations to repay loans to banks. The company raised money from investors by issuing common stock. This money was used to repay loans. Less debt generally gives the company a stronger financial position. A return on investments is paid to investors in the form of a dividend. This indicates the company's strategy is to return funds to investors rather than to keep all earnings to reinvest in the business. After viewing this video, you should be able to prepare the investing and financing sections. This entails computing the amount of cash related to purchases or sales of all long-term assets, computing the amount of cash borrowings or repayment of long-term debt, and computing the amount of dividends paid. You should also be able to generally read the cash flow statement. We will walk through an example that shows how to prepare a simple indirect method cash flow statement in the next video. Thank you for taking the time to be prepared for class. It is much appreciated.